Okay, so just a quick stream on Bitcoin. Um, this is my approach to technical analysis. Now, I wouldn't say I'm a pro. Fairly new at this still, to be fair. It's been, I would say, around 2 years now of trying to learn how to do this. And I've been using, I use YouTube content to learn, some of the more well-known YouTubers out there. I've used Twitter a lot, followed a bunch of people, and so far so good. So what I've learned so far is how to read the charts, how to read price action. I just start from the weekly, to be fair. I could start on the monthly, but what I see on the weekly is going to be pretty much what I'm going to see on the monthly. So on the monthly chart, we can see, there's not much data on futures, Bitcoin futures, up until September 2019. And we can see what's happened here in 2019, obviously after 2018, when we had price at around 17s, 18s. We went down through 2019, we had this sort of like bear market, and then 2020, we had the COVID crash, and then that caused a massive push up. Well, the reaction to that anyway, that caused a massive push up, along with the other markets. Sorry, and then from there it was just basically moon galore. We had 60Ks there, smashed through that there in 2021 April, came back down. We thought, oops, we're having a repeat of 2018 here. We might be entering a mad bear market. We didn't. Lasted a few months and then we bounced back, took out these highs, made a new high at 69s, 68s there, and then from then on it's just been death, and here we are. I traded some altcoins around these levels, I believe. I managed to do a decent run, a 6-month run, where I almost tripled up an account, and then I ended up blowing it. I started to go short too early, around, I can't remember when it was, but I started going short way too early, I think earlier this year, just before the market turned. I think it may have been around March times when I was going short. And obviously when this price action happened here from January up till March, and the alts bounced up, I got squeezed out, and I just was too stubborn. I broke all of my rules that I developed, all of the good rules that I developed in that time, in that 6 months time. I broke all of those rules and I ended up suffering, so I blew that account. And then since then it's just been a case of taking a step back, not rushing to get back in, to be fair, just analysing the markets. I'm not just analysing one market, Bitcoin, analysing crypto as a whole, looking at alts, looking at the index markets, looking at forex markets, and even some what's the word I'm looking for here? Some commodities, yeah, oil, gold, silver, and then trying to just build a bigger picture of what happens, to be fair. But anyway, back to Bitcoin. So here we are, the monthly chart. So what I can see here, quite simply, is the last time we had a massive push up in 2020. We had this candle of November here, following on from this candle of October that smashed out September's candle on the monthly anyway. And then the first reaction where we saw sort of like a pull down, price coming down and then going back up. Whereas you can see here, it's basically just up, with two green candles that are full. Not much of a wick on the downside. Now in November we did. So around here, November, December time, looking at this one on a monthly, I can see that there was something going on here. So then if I zoom in on the weekly and just go back there, that's what we can see. We can see that we formed like a mini top, to be fair, around this time. As you can see, we came up here in November, smashed that up, smashed above this weekly on November, came up there, and then we had this candle form. Now this candle on the weekly, if you look at the context of price movement, we've had this low formed in 2020 March. All the way from here to there, that's a massive push up. That's around 3Ks all the way up to 18Ks. That's like almost 5 times, 6 times. So we had this massive push up, and then this is when now we started to pull back down a bit. we had this candle here showing a little bit of indecision in the market, and whatever caused it. And then people from here would have probably been thinking, you know what, maybe the market's going to turn and at least go back to these levels here, right? Because these were the last significant highs before the market smashed through on this candle and then rallied up, right? So when this happened, this was the first sign, as I pointed back on that monthly chart, that the market had turned a little bit. So when this turns, we can see that there's something happening here at this level. So we've got this wick form there, that wick form there, that wick forms there, and then we've got this move up here on these 3 weekly candles. They are higher highs, obviously, because that high is lower than that high, and that high is lower than that high, and obviously the vice versa. That high is higher than that high, and that high is higher than that high. So we've got 3 higher highs going up there, and then all of a sudden, the next week we close with this hammer. Now you can interpret candles however you want to interpret them, but obviously the fact that we've got thin bodies on this candle, that candle, and wicks, it shows that the market here was at an indecisive period, and it could have easily turned and then obviously gone back, tested these levels, and then maybe carried on the run, but it didn't. It just formed this area here, which becomes an area of interest in the future, and then the price just did a madness, and just as you can see there, we went from around 18Ks all the way up to the 60K run, and that was it. And then since then, as you can see, we've never ever come back to test these prices, except for right now. So these levels become significant to us because the last time we did get to them, we did form a little bit of a reaction to it before we pushed up. So now, as we can see, we came down here, we took out this low here, which tested these levels of all of these 3 candles where we had that indecisiveness. So some people would say, oh, there was a bit of a gap to be filled, or there was a bit of a, what's the word that people love to use? A bit of a, damn it, I can't remember the word. But there's a word everyone, not everyone, but a lot of people like to use when price moves in one direction and it never gets retested again, and it becomes a level of interest in the future that the price could come back and then react to that level. But anyhow, as we can see, the price did come back to this level here, which is that there, and it does react to there. So in June we had this low form, and then as you can see, we've had a slow move up, but nonetheless it is a move up because we were at 17Ks, 18Ks, we've moved up and touched up to 25Ks. So that is, if we look at what that move up, before I try to be too smart and calculate that myself, but yeah, I was about to say 30s to 40%. So a decent move up there. If you caught that and swung trade that for a few weeks, that was not too bad. And now here we are. So we reacted there. The push up wasn't amazing. Last week's red candle kind of showed us a change in direction, back down again. And obviously some people love to see price action develop in this way. If I can just drag that, they love to see it like this. They'll see, and then they'll see this form, and then they'll say because that initial move was downwards, that will get continuation. And obviously if you can see here, what we've got is a little bit of this and a little bit of this, and then now some people will probably be thinking maybe we get a little bit of that, and then we look over to the left here and we can try to find, obviously it's not going to be as deep as that, or maybe it could, whatever, I don't know. We look on the left side here and we think, okay, what's the most significant level that we could retest? On the weekly, obviously, like I said, the last significant level that we had were these highs here before we smashed through them, and then we've never been down to them again. So maybe some people will be targeting those 12Ks. Is it likely to happen? I'm not sure. Who knows? You just treat the markets as they are. As you see them, you just try to be as proactive as you can and react to them as quickly as you can. So that's the state of play on the weekly. And this, again, I'm just using a basic level of, you could say, support and resistance, or just basic levels of interest where price reacted to before, and we're looking for price to react to them in the future. And here we are, we can see that price has reacted. And then now if I zoom into the daily, and we can see on a larger sort of like time frame using the daily, so we can see that what I was pointing to here. So let's just do something like this, drag this all the way here, get a nice little zoom in here, and we can see how this price action formed on the dailies. So some people could say that this was a head and shoulders, left shoulder, head, right shoulder, and obviously we had this little pullback to there. And then from here, if you just look at this like this, some people would tell you that, you know what, Price, because it failed to smash these levels here, and then we had this rejection here, resistance form, bang, we'll go down, and maybe we do go down, you know, to those levels down here, but we didn't. We ended up going to this here, and then from there back up to here, but we did react. So we did react to this level here. As we can see, these 3 daily candles, we've got wick, wick, wick. So we definitely were getting a reaction there. So it was going to be, so this here now serves as key information for looking at future price action. So we can see that we had this resistance here, call it whatever you want to call it, head and shoulders, whatever. We had this level of resistance here, and I'm not making it up, it's fact. That's how I like to look at price action. You look at it as a matter of fact of what happened, and you interpret what happened. You don't make bullshit up based on your thinking of what will happen. You look at what happened before, and you kind of use that as information as what could possibly happen. But what could possibly happen is always based off your understanding of factual events. So this is a factual event. This happened. We had resistance. We smashed through. We failed to go up any higher. We swung down here. Bang, came down here, resistance, and so on. And when the price comes back up here, guess what happens? 1, 2, 3, resistance. But we can see how price is moving up. We've got low, higher, low, higher, low, higher, low, higher, low, etc. And then what's important is to observe this candle here. As soon as we smashed up here, if you hadn't entered your longs yet from this price action, you definitely would have been looking to enter possibly on a retest down here. But we don't get that chance, do we? The only time that we get sort of a pause in price movement up is here. And in crypto, a lot of people love to play to look at stuff like this. So they'll look at price action developing this way. If I can just so they'll look at price developing this way. You've got a level that will form. Say we smash above that level there, but we never revisit. But what will happen is we'll get like a sort of like a triangle of some sort. If I can just draw like a, it's not really the best, is it? But a triangle of price of some sort, I don't know, like this. And then here, where we have this pullback, say this pullback is not as deep as, but we have this. Basically, this is a slowdown. This what I'm drawing here is basically kind of what happened over here. So this momentum, the slowing down of momentum of this movement up here. So obviously what I mean by that is we've got this massive move up here, and then all of a sudden, whoa, we're just smashing into resistance. So you've got 1, 2, 3, 4, 5, 6, 7 daily candles that all signify resistance. And as you can see, what I'm trying to show here is sort of like price went up, and then all of a sudden we've got like a little triangle sort of form there. Let's just bring you back into here. Yeah, so sort of like that. Yeah. So some people that so what people are looking for here, like I said, was we smashed up here. What people are hoping for is at least come back and retest these levels. We don't. However, we get this sort of price action here. Now, if you were waiting for the long entry there, you didn't get it. But if you've been in crypto long enough, you'll know that when there's momentum in the market, you'll get something like this form. Now, when something like this forms, if your diagonal resistances are smashed, like in this here, we've got 1, 2, 3, 4, 5 diagonal resistances. They get smashed by this candle here. That's when you start to go long. Now, you could go long, swing long that, or you could even do a scalp. I'm not sure how you'd have scalped that, to be fair, because obviously look at what happened there. There's no knowing what's going to happen in the future. But if you went long there, your idea of going long is basically what you're saying is I've smashed up here, I'm going long, and I'm going to base that off the last significant candle. And really, the last significant candle was that one there, because that's the last daily candle that pushes this price action. Now, you could have done that, right? Some people would have even used that candle because this was the last, extremely last significant low that pushed this price up. So you've entered, you've smashed out, you've entered, that's your stop loss, and bang, you're riding it. And the reason for this is you're going long is because you know that whilst you're going long here, if this move gets invalidated, you're happy to kind of retest that long. As long as we get a retest of this area here, you're still going to be looking to catch longs, aren't you? So yeah, that was that. And you have to remember how these moves form, because this is not going to happen once. This kind of price action, this will happen over and over and over again in crypto. It just happens. So you have to remember how these price actions form, and then act upon that. So anyway, back to what we was looking at. So we were looking at this level here. I've showed the resistance, the reaction, and so on and so on, and we're referring to that back to what's happening now. And this is what happened in June. There was a significant low that was formed, and then bang, this candle here. I think I even posted about this on Twitter. I'm not sure if I did. I think I did. I may be wrong, but unless it was I can't remember. Yeah, I remember posting something about a candle that formed a low somewhere, and then the reaction on that candle was basically what triggered the next move up. And yeah, so here we are. So now the state of play is as follows. I mean, if we look at trend lines and whatever, and price moving up, just do a rough trend line here. If we're just going to use this as a guide, I mean, okay, we've got the low, high, low, high, low, high, low, bang, 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 and then all of a sudden, whoop, we smashed down. And some people will be looking at making this kind of play here. They look at this low here as the last significant low that pushed the price up. Basically, from this low, we went up to there, and then all of a sudden, we smashed below that low. So maybe what we're hoping for now is like a retest. So if I use this, which will show it better. So perhaps we get up to there again, we retest it. Maybe we do a little bit of a deviation on that move. Oops, that's not the best. So maybe we do something like this. We go up there, we go up there, we deviate, we test from below, we smash that, we come back and retest the last significant low that would have formed there, and then bang, maybe we come test these lows, and then we just float around this area for a bit, right? We could get something like that. And that would be a valid short to take, obviously. Or you could obviously keep an eye out on these highs here. Just be a bit cautious and think, okay, maybe the market, because you never know what the market could do. We could get a crazy move where we just get bang, smash that out, come here, down there, and then bang, we're back into this sort of range here. So we've got these are range highs, yeah, kind of range lows, smash above them, and then that feeds in the next move down, and then bang, we're down here again. That's where we are. To be fair, that's my opinion. I mean, some other people would have taken a long here. I know I was looking at this, to be fair. I was looking at this myself, looking down here. I'm thinking, we've got this candle that formed there, significant candle in terms of candle types. We've got basically what happened in this move was the market attempted to move down, and you can see with that wick, but the reaction to the market was, no, you're not going down, you're going back up. And then what followed is a massive candle up there. This candle basically eats the body of that and that. We still have that wick there. So this suggests that this was an interesting area where the market reacted to. So what people would have been targeting was the market would come and retest here, form a double bottom, which kind of does, bang, bang, react, and we move up. So it would have been good to take your longs there. However you'd have timed them, that's up to you. In my new trading days, I would have probably taken a long here just based on the double bottom formation. But where would my stop have been? So now I try to avoid situations like this because I just want some structure behind price action, something to form that will give me an idea of an invalidation. So for me, what I would look at for sure, I would still be looking at this level here. If I could just get a little rectangle. Oh no, what's that? What's going on here now? What is this rubbish? Just select this. What is this crap? Go away. I don't want to highlight. I wanted to get a bloody rectangle. So yeah, that's what I'm looking at here. Bang. Looking for the market to come up there and then react to this level. I want the market to interact with this level here. I won't do nothing. This is very messy. I've seen this happen over and over again. This, if you zoom into the 1 hourly chart, you'll just see that this is a nice little range, but the way that this chops up and down is just, I mean, if you're a scalper, you can, yeah, you could, you know, you probably could take a short where if we zoom in, I know I'm kind of veering off a topic a bit here in terms of what I was just describing with this level. But if we just, let's maybe make this our range high and just, yeah, that would be the range lows there. Deviation, and let's zoom into the 15 minutes, or even maybe range lows rather than deviation, but yeah, call it deviation, range highs, bang, we flipped it. So yeah, okay, flipped it. Significant last high on the 15-minute is here where price was before it shot down. So we touched up there, the price shoots down here. and now this is where we're looking to target there. And as you can see, obviously this is what's happening right now. Let's look at this. So we've gone bang, bang up there. We've retesting there. We're hoping for the move up. We're hoping something like this, and then bang, etc., etc. Right? On a very, very basic level of like chart analysis. Yeah. So would I be looking for a short there? No. The only way I look for a short here is obviously if the market fails to break above this high, fails to break above that high, forms, or maybe even takes out that high, to be fair, takes it up to about here, bang, 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 something like this, bang, and then maybe something like this, maybe. That's what we're looking at. So you take your short here. Because with this, there's a lot of like support to this argument of shorting here. Because you look at this, you're like, okay, we took out that high, we made a new high there, we've made a lower high here. So it's like we've taken all this, I don't know what you call it, liquidity or whatever, these levels, we just smash through them, and the market's just feeling to go up. So where else is it going to go, right? And then there's all this here, all this looks juicy, right? It just looks so attractive. So it wouldn't be completely impossible for the market to come back down here, right? So that's just something to keep an eye out for. But yeah, I got distracted there on the 1 hourly and then zoomed into the 15 minutes. So back to the 4 hourly. Yes, so on the 4 hourly, if you want to take this and then maybe form a swing trade idea, that's what I would be looking for. So we smash from here to there. Let's do something like this, retest from below, and then down to there. These kind of levels there. That's not a bad trade, I would say. And of course, if you want to go long, if this is going to serve as this here will serve as the double bottom, whatever you want to call it, double bottom liquidity, I don't know, all that good stuff. If this is going to serve as that, and this is going to be the rally up, the move that's going to feed this move up, then we hope for something like this, take out these, retest, cause a bit of havoc in the market, and then bang, bang, bang. We're moving up, and we're looking to test these kind of levels here. So yeah, we can look at it that way. But obviously, with the greater, I wouldn't say the greater picture, but the bigger picture in mind. I need to get my use of words correct. The bigger picture in mind is we've got this, bang, 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 and we're hoping for something like this, as to follow sort of like textbook price action patterns or whatever, something like that.